Breaking news, the Bank of Canada held its key rate at today's announcement. But don't let that fool you. The real story is what they're not telling you. From a struggling economy, rising global tensions, and US tariffs that are crippling our economy, there's a lot happening behind the scenes that directly impacts your home's value. In today's video, I'm going to help break down the recent Bank of Canada announcement for you. Watch till the very end because I'm going to help break down what this means for you as an East Abbotsford detached homeowner. Let's dive in. So the first thing is the Bank of Canada held its key overnight rate at 2.25%. No surprise. As a homeowner, this means borrowing costs are stable right now. There's no immediate jumps or drops in your monthly mortgage payments, giving you a window of predictability to plan your next steps. One thing that I can tell you folks from one of the conversations I had with a senior mortgage specialist on my team, they mentioned that fixed rates have gone up. And stick around for future videos where I'll be breaking down what those interest rates currently are at. The second thing is the US Federal Reserve also chose to hold rates. The US Federal Reserve chose to hold their key interest rates in the 3.5 to 3.75% range. They are taking a wait and see approach due to sticky inflation and global uncertainties. This move is similar to what we're seeing here in Canada, which is be cautious and taking a steady approach. The next thing is global events are impacting local inflation. When we focus on our neighborhoods here in Abbey, global events play a big role. The ongoing conflict in the Middle East has caused global oil and natural gas prices to rise sharply. This increase in energy cost is expected to push up local inflation in the near term, meaning we might see higher prices at the gas pump and for everyday goods. The next thing is the Canadian economy is slowing down. Our national economy is cooling off after some growth last year. The Canadian economy shrank by 0.6% in the fourth quarter. We're also seeing a softer labor market, with unemployment rate rising to 6.7% in February. This economic slowdown is a key reason why the Bank of Canada chose not to raise rates. They don't want to put too much pressure on an already cooling economy. One thing that I can tell you folks is one key thing that's impacting Bank of Canada from either decreasing or increasing their rates is the CUSMA renewal talks this year. If Canada, the US, and Mexico can agree to some sort of agreement, what we'll see is the Canadian economy improving and businesses investing more money. And when I say investing more money, this means they'll spend more money on marketing and hiring more people, which means we'll see an increase in the number of new jobs created. The next thing is inflation is moving in the right direction. There is some good news on the inflation front. Overall inflation dropped to 1.8% in February, down from the 2.3% in January. Core inflation measures are also hovering right around the bank's 2% target. While food prices are still high, the general trend shows that the Bank of Canada's previous efforts to cool inflation have been working. The next thing is the US tariffs are creating uncertainty. The Bank of Canada is closely watching how the Canadian economy adjusts to recent US tariffs and trade policy uncertainty. These tariffs can impact our exports and overall economic growth. For decision makers and business owners, this creates a layer of caution as it's still too early to fully understand the long-term effects on our local and national economy. And this is what I was saying earlier. We're going to have to wait till this fall just to see what happens with the CUSMA renewal talks, and those decisions of whether we reach some sort of agreement will have an impact on whether our economy approves, or if there is no agreement, things might not get better. Remember, beginning of the video, I mentioned that I was going to help break down what this announcement means for you as an East Abbotsford detached homeowner. Here it is. If you're someone that's thinking about listing your home this spring, there's two things that you need to pay attention to. The first one is pricing. If you're thinking about listing your home right now, you need to list it at market value. If you overprice your home by $50,000 to $100,000, you decrease your chances of selling your home significantly. Here's why. Buyers right now are working with 4 months of inventory to choose from. So if you're on a home that's overpriced and you have no intentions of selling, there's a very good chance your home will sit on the market for a very long time. The second thing is the presentation of your home matters. How you prepare your home and how it shows when it listed will help determine whether your home sells or you rack up days on the market. I recently did a video where I broke all of this down. So if you're interested, click this video above where I talk about the top mistakes East Abbotsford homeowners are making in today's market right now. If you are a homeowner that has no plans of selling their homes for another couple of years, stay the course. This shall pass too with the global uncertainty, with the US tariffs. It's just a matter of time before we reach some sort of trade agreement, and real estate is a safe long-term play. We might not be able to predict the future, but what we can tell from past history is detached homes in East Abbotsford that are owned by homeowners for 15, 20 to 25 years have done really well by simply living in their home and holding on to it for a very long time. And the way these folks are funding their retirement is simply through the price appreciation they've seen from the time they have purchased their home. If you are someone that is thinking about selling your home this spring, you're probably wondering what's happening in the East Abbotsford detached market right now. That's why you need to watch my next video, because I provide a complete breakdown of the East Abbey detached market and we compare that to the Abbey detached market. Drop a comment and let me know your thoughts on the recent Bank of Canada announcement. Do you think things will improve or are things going to get worse? If you haven't already subscribed, please go ahead and hit the like button and subscribe button. I'm Gary Dhindsa and we'll see you next week.